Hello and welcome back everyone to this weekly update on the financial markets. My name is Jens and like always I want to discuss with you the four main assets: S&P 500 index, US oil, gold and Bitcoin against US dollar. I'm a technical analyzer of price action, so that's the main thing we will speak about. And afterwards I will go with you through my watch list of single assets, mostly single stocks. Every one I'm currently having a setup in is marked with a flag. Yellow means I have a setup that is not triggered yet. Red means that's a setup I already been in a trade, so the trigger got hit and I'm long or short in the stock. And yeah, I will cover with you a lot today because it's the first real trading day of the year. The 2nd of January was the first one, but this is the first full week of 2026. Like you can see, something has changed here. You don't see anymore a paper trading account of TradingView, but instead a real interactive brokers live account with 10,000 euros of value. And yeah, you can see here my first trigger trade in JBL, and we will cover that later. If you want to skip any part of the video, there is a timeline function in YouTube, so you can look it up, or in the description below there's a detailed view of the chapters. Feel free to jump around. Let's start directly in with the S&P 500 index on the weekly time frame. S&P 500 index on a weekly time frame, you can see that S&P 500 index is in a weekly uptrend, printing higher highs followed by higher lows. We had a really nice run last year, and the MACD indicator is showing some crossing to the downside. That can be seen as bearish, but like you can see back in the past, we have seen it a couple of times on the weekly, but price kept climbing. So don't give too much on this indicator on the weekly here. Let's drop instead down to the daily time frame. On the daily time frame, you can see the daily uptrend line. It's hard to draw that one with this kind of uptrend, but this is the last all-time high. And if I connect the dots from the low of the movement to the high of the movement and the rising part, then this is at the moment the current daily uptrend line. What's way more interesting is that we have a very high sideways consolidation at the all-time high level, around that level. 200 moving average and 50-day moving average are supporting the current price action. You could argue to see here an head and shoulders formation, with the neckline being this daily support and resistance zone. We have seen the small breakout, now correcting back. If we break that one to the upside, that would be pretty bullish, in my view at least. Possible stop loss placement would be the last significant low here. And I would first aim for 1-to-1 risk-reward ratio, reduce then my position about 50%. So then technically the trade is risk-free without moving my stop loss anywhere. And from there on, I will scale up and see what price action is doing. And we will see how far the rest of the 50% we can ride to the upside before price action tells us to get out completely. I said to you before that I'm not anymore on a TradingView paper trading, so I can't trade at this symbol anymore. I had to switch that one to an ETF. And because I'm a European citizen, not the American version, but the European version. But technically it's the same. You see the chart is looking pretty similar. But here you can see now my setup. I was setting up an buy stop limit order. So that means if my stop order gets triggered, so price has to rise above the prior all-time high, then I want that my broker buys me the 146 shares, but I don't want, if the price jumps too high with a gap, then I don't want to pay more than the buy stop limit, which is slightly above that one. It's just to control risk and risk reward ratios a bit more. Stop loss is placed below the last significant low. I would risk on this trade, if it gets triggered, 100 euros. That's all I have at the moment for the S&P 500 index. I'm pretty bullish, not bearish for sure. If we turn here, then I'm getting bearish. I think at the moment this low here is the line in the sand. So if we get below that one, then we will see probably a huge correction. Everything that stays above this low can easily go into a longer sideways consolidation. Definitely possible. Because of that, I'm waiting for a break again of this retest to the other side. I think it's more conservative. Okay, that's now really everything for the S&P 500 index. Let's continue with US oil. US oil here on the weekly time frame as well. You can see the red monthly downtrend line. That one was the norm for long time. Before then we have seen the breakout to the upper side. Now in a weekly A, B, C correction, you could argue. At the moment this weekly downtrend is dominant, and everything below this one speaks for more bearish continuation price action. You can look for early signs on the lower time frames, but until we see not a break, you should be cautious with long trades in US oil. If you drop down to the daily time frame, you can see that I was able to draw a daily secondary downtrend line here. We violated slightly the prior low, so this becomes the new low of this complete weekly corrective movement. At the moment we have a daily MACD divergence, so MACD is making higher lows while price is still making lower lows. That's normally bullish and speaks therefore that we'll see a push higher. How far that one will go, that's another story. For sure we can go higher, maybe bounce at the 200 moving average or at the weekly downtrend line and reverse from there on, and then see lower lows. Absolutely possible. So if you are willing to take trades here, at the moment I have drawn in this one as an example. You make decisions like always by yourself. I'm no financial advisor, just showing you what I do and my personal ideas. And you could get long above this correction. If we break out above the 50 MA, then go long, stop loss below this corrective movement here, and then take early profits once you reach your risk. And there will sell then 50% to take the position risk free. And on the 4 hour time frame, it's not really looking different, except that we have here the 200 moving averages of the 4 hour time frame, or at the moment acting as resistance. Once we break that to the upside, it would act as support. So at the moment, yeah, after the news, we have to take that one in. Venezuela, America. I think oil prices could stay cheap in the future. So yeah, not too bullish on that one, even if this looks like it could get a small bottom formation for a short long trade. I'm not trading that personally because, like I said, I'm not on a trading paper trading account anymore. I'm at Interactive Brokers Live, and there it's pretty hard, I noticed, to trade US oil. I'm not trading CFDs, I'm trading real stocks, real ETFs, etc. And yeah, US oil, you have ETFs on that one, but the rolling costs of the futures are inside that. So the chart is long term not looking any near similar like the real US oil futures chart. And because of that, I decided for myself to not trade this one because it's not accurate enough for my trading, but I like to have an eye still on US oil in the future for the rest of my decisions, because energy prices are important for a lot of stuff that is going on in the economy. Next on the list, gold. Gold spot on the weekly time frame, looking nice since we left behind this sideways consolidation and this weekly or even monthly resistance zone. We went into a bull mode with higher highs followed by higher lows at the moment. That's still the case. Last correction taken out to the upside, pullback, and now again green bullish price action. 10-week moving average is supporting everything. No MACD divergence on the weekly time frame. Nice. Daily time frame. Intact daily uptrend. Last sideways consolidation broke out to the upside and created a new daily secondary uptrend line here in white dotted. We can see prior all-time high got taken out. Red massive candle retesting the breakout level. We turned here right at the secondary daily uptrend line, and it seems like we would like to reverse to the upper side. One thing I'm cautious about at the moment is because once we have seen a very phenomenal year in 2025 for gold, doesn't mean that 26 will be a bad year, but cautious. Here is a MACD divergence on a daily time frame, a massive one, and here you have higher highs. Because of that, I'm not sure if that's sustainable, even with this pretty significant red engulfing candle to the downside on the daily. It can continue and blow up to the upside, taking out the prior all-time high here again. But at the moment, I'm not looking for trade in gold because we have seen so much gains plus this divergence. Not an A+ trade anymore for me. On the 4-hour time frame, it's not looking bearish at all. 200 moving average is supporting. Uptrend still intact. At the moment, we're working at the 4-hour 50 moving average. What can happen is bullish, they will continue. And yeah, but it wouldn't be a trade anyways for me. But what can also happen is that we will turn here and make lower low. So taking out that low, and this becomes then a short opportunity if you are shorting markets, stocks, indices, commodities, etc. Because then I think we have to make a huge correction, probably all the way down at least to this level here. So that could get maybe a nice risk reward ratio, but we have to see how price develops. For me, I think I will not go short or long at the moment in gold. I'm also decided to go not any more short like I did in the TradingView paper account. I think I will change to a long trader only, and if prices are declining, I just stay out of this current asset or market. Next on the list, Bitcoin. Bitcoin on the weekly time frame. Here you can see that after the all-time high in 2021, we've seen a huge decline like always in Bitcoin, and since then we are printing higher highs followed by higher lows. The weekly uptrend was a long time intact, but then we have seen in November 2025 the breakdown. Since then we are sideways consolidating. That move could have been seen with this weekly MACD divergence. Price was making higher highs, MACD was making lower highs, and that's a bearish sign. We lost the 50 moving average. That one was long time and nice support for price, and also in prior Bitcoin cycles this acted as an indicator that the uptrend is over and the downtrend path of the 4-year cycle for Bitcoin is ongoing. So in my view, the likelihood that this year's all-time high of Bitcoin for this 4-year cycle is pretty high, and that we now have to see maybe 1 year of bearish price action before we see the major bullish price action like we are used to it in Bitcoin. That doesn't mean that we can see a short-term rally, maybe to $107,000, $108,000 again. But then my prediction here, we use the word prediction here, is because we have to see from week to week, from day to day, what Bitcoin is doing. But my prediction is that we will then turn and roll over and continue lower. How far? That's the question. Maybe we will respect this monthly downtrend line here, and that would be nice. So then the decline wouldn't be that huge like we are used to it in Bitcoin. 50%, that would be a mild bear market for Bitcoin. So yeah, let's see. MACD is about to turn in a couple of weeks. I think we are at the moment working at a 10-week moving average. On a daily time frame, you can see that the secondary daily downtrend line is already broken. We printed a low, a higher low, and we are about to get, maybe in a couple of next days, a higher high. So a turn from a downtrend to an uptrend. Technically, that's bullish, at least short term. Like I said, we have a couple of resistance zones in our way, plus this weekly uptrend line where price can easily bounce again and turn and continue lower. So speculating on rising prices in this downtrend can be risky. So if you decide to do so, please take early profits. Only my view, make decisions by yourself. But I would take early profits to take the trade risk-free as fast as possible. And with the rest, it's a lottery ticket, and you can ride at one higher and take partial wins on riding it to the upper side. I would look maybe at the 200 moving average to take out the partial wins at least, because that's also an indicator that often is resistance, and from there on price could easily turn again to the downside. At the moment, not trading Bitcoin here in any way. Maybe if we see really the higher high, a pullback, and then a takeout of the pullback. But probably the risk-reward ratio ain't good enough then anymore for me to trade that one. But yeah, that's my current view on Bitcoin on the 4-hour time frame. Not really looking any different, to be honest. Short-term bullish, long-term or mid-term bearish, and long-term again very bullish, like you know already if you are watching my videos. Okay, that's it for the 4 main assets. What I now want to do is switch to my single assets, most of the time single stocks, and discuss all the ones that are flagged. The other ones are on my watch list. I am closely watching these stocks, and I have even more watch lists I'm screening every week for you, and for me of course too. And yeah, I will show you my current setups and trades. Investor AB, that's a nice industrial stock with a couple of companies inside. It's the Swedish Berkshire Hathaway, so to say. And yeah, we are a nice rising uptrend. Weekly uptrend is still intact. We have seen a huge correction nearly all the way down to the 0.618 Fibonacci retracement level, which is an important level. Then we climbed all the way back up. We had some sideways consolidation below this daily resistance zone. We broke that one to the upside, went to the prior all-time high, got rejected, and then broke it to the upside. Now we have here a small mini corrective move, and I placed my buy stop limit order right above that one, so I give price a time to maybe correct all the way down to this daily secondary uptrend line, and then finally take out the prior all-time high and trigger my buy limit order. The goal is to reach first a 1-to-1 risk reward ratio, to take then 50% of the position from the table to reach a risk-free status with this trade. My current stop loss is placed below the last significant low and also got protected by this daily secondary uptrend line. It's a breakout trade because that's the all-time high, and I'm trading the breakout to new all-time highs, but I think this stock is well positioned for the future. I'm also long-term invested in that one, so high conviction on the technical front here and also the fundamental front. Makes it easier to hold, but also some bias here, so I have to keep that one in check. Because of that, I'm not risking more than 100 euros on this trade. You can't see that one right now because EBKR and TradingView has problems calculating the risk in euro because I'm trading in the Swedish currency here, but it's 100 euros at risk with this stock. That's all I have for Investor RE. Let's continue with Constellation Energy. Constellation Energy Corporation is also a long-lasting uptrending stock, even if it's not existing that long, at least on the stock market. 200 moving average is uptrending and below a price. We can see here an head and shoulders formation or carbon handle, like you want to see it, with this one being the neckline. We have seen the breakout and now a long-lasting corrective move. At the moment, this correction here is printing low and higher low, and the moment we see a higher high, I think this correction can be over, and I would like to get them along in this stock. Stop loss would be placed below this complete corrective move, risking about 100 euros in this trade, and aiming like in the other stocks and assets too. First, for 1-to-1 risk reward ratio, reduce my position by 50%, take the trade risk free, and write the rest higher. At the moment, we are still below this daily secondary downtrend line, so price has first to break that one to the upside and take out the prior local high here. So yeah, maybe this week, maybe next week, maybe we'll fall lower, get rejected here and make a lower low. Then I would delete the setup, but I inform you in my next video like always. That's all I have for Constellation Energy. Next, we have the Russell 2000 index or index ETF. The Russell 2000, yeah, it had its high in November 2021. Then we have seen a huge corrective move, a long-lasting bottom formation. Then another try to get to the all-time high, taking it out slightly. Then April 2025, who does not remember that one? We collapsed to the downside, and then nice corrective or bounce to the upside, taking out the prior all-time high. Corrective move, confirming this pattern. You could argue that it's a weekly carbon handle formation or something like that, but this is a really important zone. We broke it to the upside, corrected it, and broke the correction to the upside again. I missed that trade. You could have already got in here. Stop loss below this low would be a nice setup. At the moment, you would be still in a loss, in a paper loss, but I think still well positioned. My current setup is I would like to get long after seeing the last local high taken out to the upside. Stop loss would be placed below some significant price action and probably then also below this corrective move here. Would write that to 1-to-1 risk reward ratio to take 50% from the table, taking the trade risk free with that. But at the moment, till that happens, I'm risking 100% on one trade. That would be crazy. I'm risking 1% and with that 100 euros on that trade if we get triggered. If we fall below my stop loss level, I would delete this setup and update you in upcoming videos. Next, Reddit. Reddit Inc., another stock that's not that long on the stock market, but pretty long in the internet. You know that probably. Volatile but bullish price action in the past. 200 moving average is supporting price. The last pullback got also supported by the 200 moving average, and this weekly uptrend line is still intact. The daily downtrend is broken to the upper side. We have also taken out point B of the ABC correction. So since then we have seen some sideways consolidation, and that's in my view pretty bullish. And I would like to get a long if we take out of the sideways consolidation the last local high, and the stop loss would be placed below the last major local low of this sideways consolidation. Aiming for a 1-to-1 risk reward ratio, I would take 50% from the table before we reach the prior all-time high, and yeah, afterwards I will have 50% left in this position, and would like to ride that one then as high as possible with an up trailing stop loss. But for sure we can get triggered, turn and get stopped out, and we will retest again another time this weekly uptrend. Absolutely possible. We will see. That's the trading idea on Reddit. Next, JP Morgan. JP Morgan Chase, the Bank of America, I would say. Even if there's another bank named after America, but I think JP Morgan is the better one, at least for investing. We have a nice weekly uptrend, a daily uptrend as well, at the all-time high level, sideways consolidation, printing higher lows, and final we have seen a breakout to the upside, a pullback to the breakout level, and now again green bullish price action. If we see the pullback taken out to the long or upper side, I think a long trade is a good idea. I placed their stop loss order, and my risk would be capped at 100 euros or 1% of my account balance below the last significant low in this sideways consolidation. And I would like to write that to 1-to-1 risk reward ratio higher, take then 50% from the table, take the trade risk free, and the rest write that one higher. It's every time the same procedure, but I think you get the point. I'm bullish for sure. We can turn. The setup gets not triggered, or it gets triggered and then turn. That will be sad for sure. Because of that, I'm not one to risk more than 10% at once or at the same time in my account. So the max drawdown that can happen in 1 week or so is 10%. Except we have no price gaps to the downside. That would be a huger risk then. Next, JBL. JBL Inc., you know, that music producer, boxes, Bluetooth boxes, producers, etc. Yeah, it has a better chart than I would have expected for the product. But yeah, it's a nice uptrending chart, so we shouldn't ignore that one. Printing higher highs and higher lows on the weekly intact uptrend. We have a daily uptrend that is intact, supported by the 200 moving average. We had sideways consolidation at the all-time high level. We have finally seen from lower lows to higher lows, so a turn from a downtrend to an uptrend. We already have taken out the prior all-time high, small pullback, and then on the 2nd of January, first trading day of the year, we have seen this green candle. I hope that one will continue with this first trading week. I got triggered slightly in profit, but pretty near the entry level here. Stop loss is placed below the last significant low in the sideways consolidation and should be also protected by this daily uptrend line. If we see a continuation of this breakout, it's definitely a breakout trade, then I would take at 1-to-1 risk-reward ratio 50% of the position from the table. So I would place here a sell limit order of half of 3.34 shares, and then write the rest higher, or if I'm not so lucky, we will turn and take me out of the trade. That's part of the game. Next on the list, uranium ETF. Global X uranium ETF, same story here. I have here the American one, not able to trade that one with a real European account, so I switched to the European version of that, but same price action. So no problem for this. We have, you can see that better on the American one, longer history, with a long-lasting sideways, slightly up trending price channel. Finally have seen the breakout in the year 2025. Since then, a nice bullish uptrend. We switch again to the European version. You don't see this price channel that well, but you see the uptrend, trending higher highs and higher lows. At the moment, we are near the 200 moving average and price sideways consolidation here in price. We have seen a low, a high, a lower low, and what will now follow, if we see here at the end of the correction, would be a higher high, and that one I would like to buy. Stop loss placed below the two lows here, aiming for the 1-to-1 risk-reward ratio. Would take 50% of the table before we reach the prior all-time high level of this ETF, and write the rest higher. That's the idea, that's the goal. We will see if that works out like planned. Novo Nordisk. Yeah, looks nice, right? Nice chart. Ain't anymore. Yeah, crazy roller coaster ride in this stock. It's a high quality farmer stock out of Denmark. We have here a weekly downtrend line, trending lower lows and lower highs. So an absolutely intact downtrend. Don't miss that information here. We have a MACD divergence on the daily time frame at a major level. So the possibilities here that we will really see a turn from a downtrend to an uptrend. The weekly drawn in downtrend line is already broken, but you can correct lines if you see lower lows. So that's not everything that counts, but at least there's a chance. We have seen some sideways consolidation, and yeah, hopefully we'll see a break higher. That would confirm for me that I want to get long in the stock, give it a shot again, and would like to risk 1% or 100 euros on this trade, placed below the prior all-time low of this movement, and aiming for the 1-to-1 risk-reward ratio, taking 50% from the table and write the rest then risk-free higher. That's the idea. The 4-hour time frame, you can see it in more detail. We have seen the sideways consolidation after the low. Here also short-term 4-hour MACD divergence. We've seen the break above this 4-hour resistance zone, now turning support, pullback, and if we see now that pullback breaking to the upper side and taking out the 200 moving average at the 4-hour time frame, for me that could be enough bullishness that some other market participants look at that stock and say, it's probably fundamentally too cheap and it's looking not that bad technically on price action front for reversal trade, so I take that one. And then maybe we'll see nice bullish price action again. Yeah, it's not, it's anti-behavior of the market. So it's the riskiest one I think I have here in the list because I'm trading against the major trend. But yeah, my risk, my account, just informing you about that. Elevance Health. Elevance Health Inc. on a monthly uptrend line, trending higher highs and higher lows, but lately we have seen some major corrective moves on the weekly time frame and also here on the daily time frame. You can see the weekly downtrend line got already broken slightly to the upper side. We've seen lows, higher high, higher, lower low, lower high, and then here the first higher low. So that could be the first sign of a trend change. If we now take out the prior high to the upper side, that would mean we see also a higher low. So the chances there that we will finally see the turn in this long-lasting uptrending stock and continue higher again. We would also take with that out the 200 moving average, which would be also bullish. I would get long here above the last local high, like I said, and my stop loss is placed below the last major low here, aiming for the 1-1 risk reward ratio at the major weekly support and now resistance zone, taking out 50% from the table and riding hopefully the rest risk-free higher. For sure, we can see here maybe a trigger, a fake out, and then rolling down again, making maybe even a higher low, so that the bottom formation takes longer than I'm expecting. Then we have to look out, take the loss and continue and keep that one on the watch list for another breakout opportunity. That's the idea on 11th Health. Next, Intuitive Surgical. Intuitive Surgical, long-lasting medical robotic stock. Nice uptrend. Lately we have seen a huge correction like it did a couple of times in the past, but at the weekly uptrend line, so everything is intact. The daily downtrend is broken with a massive price gap to the upper side, but now we have sideways consolidation at this daily resistance and support zone around that level. 50 moving average at the moment still support. MACD on the daily short term cross to the upside, now turning again red. We will see. So I will wait that this sideways consolidation decides if it wants to break higher or lower. If it breaks lower, I will delete that setup. If it breaks higher, I will get long in this stock with the stop loss placed below the sideways consolidation, risking 1% or 100 euros in my account. Aiming first station for the 1-to-1 risk reward ratio, reduce my position till it's risk free and ride the rest higher. That's the plan for Intuitive Surgical. Stupid and simple. Rolls-Royce Holdings next. Rolls-Royce Holdings, European defense stock. They are pretty hot right now, last year and maybe the coming year as well. We have a weekly intact uptrend, but price decoupled a bit of that one. The daily uptrend so far is at the moment still broken to the downside. We have here an ABC correction, and we have seen already the breakout of this daily secondary downtrend line. We've seen the pullback and the break of the pullback to the upside. And at the moment we are pretty at the prior all-time high. If we see a reversal down, I would delete the setup, at least if price falls below my stop loss level. But if we are continuing here on the first trading week, I would like to get long in this stock and aim for a 1-to-1 risk reward ratio, stop loss below this major low in this ABC correction and this smaller price structure here. And I would take profits from the table once we reach 1 times my risk here. Take the trade risk free and ride the rest higher. For sure we can get triggered, make a slightly higher high, a double top, and then turn to the downside. That would be possible. Yeah, but also on a weekly, the MACD indicator seems like it would like to cross to the upper side and continue, and the trend is your friend. Because of that, I'm betting on a continuation instead of a reversion. Next, another defense stock, Heiko. Heiko Corporation out of America is on a nice uptrend. weekly uptrend intact, decoupled as well, trending higher highs followed by higher lows at the moment, supported by a 200 moving average, and at this all-time high level we have a long-lasting sideways consolidation at the moment. We already broke out of this sideways consolidation slightly, but reversed directly. If we now reverse again and take this reversal out to the upper side, making a significant move above the sideways consolidation, I would like to get long here, and stop loss would be placed below this corrective move here, risking 1%, 100 euros of the account balance, aiming for 1-to-1 risk-reward ratio as station 1, reducing the position and with that the complete risk, and the right rest hopefully higher. Next in the list is the DAX ETF, the German indice. The German DAX ETF lately not looking that bad here in euro, and we have a weekly uptrend, trending higher highs followed by higher lows. Also here on the all-time high level, sideways consolidation supported by a 200 moving average. We have seen a significant low, and if we now see the breakout out of this sideways consolidation to the upper side, that would make me pretty bullish for my home index here, home state index, and I would like to get a long here. Stop loss would be placed below the 200 moving average at the bottom of the range, so another wiggle room for price to develop here, aiming for a 1-to-1 risk reward ratio, taking 50% of the position from the table. Once we reach that, I take with that the trade risk free, and then we will see what we make with the rest of it. Sure, we can make a slightly higher high, turn and take me out, and this sideways consolidation will take even longer. Not impossible. MACD on the weekly time frame tells us another story, crossed bullish to the upper side. Hopefully that speaks as well for continuation trade here. Last but not least, ALAB oder Astera Labs. Astera Labs Inc. American stock, nice uptrend, not that long existing, but since then volatile, but bullish. To a moving average at the moment, support. MACD divergence on the daily time frame. MACD is making higher lows while price was making lower lows. That changed. We have here a daily downtrend line. We broke that one to the upper side, corrected lower, higher low, and now the sideways consolidation got also broken to the upside. I placed my entry level above the highest point, so above this high, higher low, and if we see now a higher high, so change from downtrend to an uptrend, I would like to get long. Stop loss placed pretty closely below the last pullback here and the 50 moving average, risking 1% of my account balance, but I can with that very tight stop loss take also profits pretty fast, taking 50% from the table, taking the trade risk free. This volatile stock would be nice, would be fast, but we can also lose fast money. We will see. Risking again 1% or 100 euros on this trade. For me, that looks perfect. We will see if it acts. I take my lessons anyway. I hope you also take your lessons out of this video, or some ideas at least, and I hope you subscribe to the channel if you haven't yet. And yeah, see you next week in my next video. Bye bye.